All right, so um, when I okay, so just kind of recapping basically what I saw today. It's funny because I look at the day now, a lot of things kind of now make sense, but obviously at the time, none of them makes sense, and it's always annoying when you now come back and you're like, shoot, all I needed to have done was just waited. Um, but anyway, so what what I'm seeing here, this obviously didn't trigger, this didn't even get hit. It was probably this measured move, or it was this measured move. Yeah, it was that one. Anyway, so the reason why I was kind of really bearish today was only because of this wedge top. Essentially, this attempt to go higher here, pull back, and then the second attempt to go higher, pull back, and then the third attempt, right? So we now pull back again, and then here we're trying to get to this top again, and we're failing. Like we can already see, there's already a lot of selling going on. So the first thing that caught me was obviously the first bar, bear bar, has a tail, right? Okay, this is moving average. So we're still opening within this trading range of the previous day. So chances are we're still in that range, right? So anyway, first bar, tail, second bar, tail. So about two bear bars in a row, but both at the moving average. Bulls will buy that. You can see they tried to break the high of the other time. They failed. In fact, I actually took a short here. I took a short here because I was planning on a bear trend from the open, but then I sort of ignored the fact that we had a tail here and we had the moving average here. Anyway, took another short and covered. Um, then we now had a second attempt to go down. So there's a double bottom that failed, and then we had one final attempt, which is a triple, which is a wedge. So you could have bought this, which is coinciding with this low over here. So it's a double bottom with this. This is a good buy, and you could have written this up. So this is the first breakout, pullback, and we went into a triangle here. So you have this breakout, and I think this is where I realized that we were going to have a trading range. Went up, had a double top, bear shorted again, and managed to get down here. So pretty much where the bulls went in. So this is big up, big down. So already things are confusing. So you know it's a trading range. So you had another attempt. So I already know that we have one attempt. This is our possible second attempt. We come here, we fail, but we don't break this low. At least this point, you now know you're in a triangle. So there's one, two, three, four, and then five, right? Triangle normally has 3 points. One, two, three. Um, you have a series of wedge bottoms here. So you have one over here. In fact, let me mark this one. You have a series of wedge bottoms here. I actually took a short here. I didn't actually see the triangle at the time. I remember saying, this is the high, this is the low. The only thing that really bothered me was the fact that we were the range at the time, and I remember measuring it. I was like, if this is the range, then we could definitely go higher or lower. It was only 28.5 points. So this short I got trapped in, and then I switched to longs, and then started messing up here. And at this point, I thought, you know what, screw this, don't trade. Then I noticed that this was then a triangle, and then I noticed we're forming a wedge. Now this is the second pullback in this. So this is first pullback, second leg pullback, right? It's the third. I also know sometimes you get a fourth, but I always count these as the same because the price is very similar. So this technically is actually the second because I think this is still going up, and this is just three legs up from this breakout here. But this breakout is the second leg up. This is the pullback, and this is the third leg up for this whole move. So when we got here, I really considered taking a short here. And then we had this bear bar. I didn't take it. We had this bar here. First it was a bull bar, then it became a bear bar, then it's closed over here. It wasn't really great as a signal bar. I did take one short before this bar closed, as this bar closed, because it was a bear bar, but it was an inside bar. And at this point I realized that we could go up because this could be an endless pullback, very much the same way these were, or we could go down. This took a while before it came down. I entered another position here, and this took a while. So this is what 10 minutes were over here, almost 15 minutes on this one. And then we formed a double top over here, took some more shorts here. But I also remember it's a range day. We've been reversing a lot. We could reverse. This is a very strong bar. It could reverse. Every strong bar range day is reverse. Anyway, so I thought, okay, but we have a wedge. We probably are going down, and this is probably the first leg here. This is a pullback. This is the second leg. Now I think about it, it now makes sense why this did not go as far as I thought. Because if you think about it, look, this is not a very strong first leg, and then the second leg is already having bad follow through on the way down. We have a pullback here, another pullback here, and then we get here. Anyway, I took this short. Saw this. I think I got out. I got out just as this bar was forming. It was a bear bar here, and the reason why I got out was because I said I don't think I'm ready to hold it all the way down to my target, which was around here. I mean, I'd already come all the way from here. This now became an inside bar here again. So this is a trading range. This is a breakout of the trading range. So right now this is a great place to put your stop if you're going short. And this went down. I took a really quick short here. Wasn't really sure what I was doing. I was trading FOMO. I wanted to get out, and then this went all the way down. I got out there and I thought, oh my god, this is actually working out. Then we got here, we started to hold, and I noticed that we have this price that they bought at, so chances are we're going to find some bulls around here. This is also a parabolic wedge. 1 pullback, 2 pullback, 3. So we should get some buying above this, which is exactly what happened. So we had a trigger here. Although this is not a good signal bar, this is a better bar. Bulls bought that and they came here. At this point, we were all looking at what would happen at the moving average. If this is truly a breakout, we should not break the moving average. We should find more sellers here. When this became a doji, I then now saw this bear bar closing on its low below this doji, which is a very good sign for us to go short. I went short here and held this down till we had this bull bar, and I think I got out just below here. This bull bar, I think, was also the intent that bulls would this signal more bulls to buy, right? So you're already getting a bull bar in a breakout that isn't as strong. You want the breakout to be this strong. Instead, you're getting this and you're getting a bull bar. So chances are the next bar bulls will buy, which is exactly what they did. They bought it, they got a wick, they got another one. This is a wedge bottom. So chances are they're going to buy it again, and they got another pullback. We have a pullback, they're already closing gaps. This wick is already closing gaps with that. So chances are the next time the bulls buy, they're gonna take out everything. Basically, they're gonna reverse it. So you had one leg up here, test of moving average, which obviously failed. Pullback. This did not take out this low. So this is a higher low major trend reversal. I actually took a short around here, and I thought to myself, if this does not collapse, we're going up, which is exactly what happened. Then I got out and I thought, okay, let's see what happens. We started going sideways. Then if you think about it, it's a first leg pullback. This is the second leg. This is technically a pullback, but I wasn't sure because on Thinkorswim this is not a pullback. So I said, okay, let me wait. Third leg, I took a short here, pullback. So this is also triggering some sellers. 58. And I thought, okay, maybe this is not a pullback. Maybe this is a pullback. Maybe I'm waiting for one more. So I held, and then this was going up. Now at this point I said, two things can happen. This could definitely be a pullback, and if it is a pullback, if this goes above, this has failed. This has become an endless pullback, in which case I need to get out. But I held, I put my stop just slightly above here, looking to short here. This got all the way up here, and at this point, yeah, when this was racing up, just before I got up, I got out because I thought this does not look like it's going any higher. I took a short just here because I felt, okay, maybe this is the wedge. I was looking at the 15-minute chart, and I said, if this is on the 15 minutes, we have a wedge top, let me get in early. So if you see the 15 minutes, the first leg up, pull back, second leg up, pull back, it's the third leg. So I shorted up here because I thought we're going to get a reversal. If we go down, but then we didn't get that reversal. Again, another endless pullback because price. Oh, and this was the other hint. If you notice, price is holding both moving averages, not just the 20. It's also holding the 1 hour, the 240. And whenever price is holding the 240 like this move is a test of this moving average. So essentially, on the higher time frame, if you notice, this is where we crossed the moving average. We tested it here, came back, tested it here, came back, tested it again, and it wasn't a successful breakout of that moving average, and that's what's going on. We're going higher. Anyway, So we held this too. We finally broke it, but also held this, found some value on the moving average. This is now acting as support. We had another test of moving average acting as support. So at this point, this is already a sign that maybe it's not a good idea to stay in this short. We now had a breakout above the wedge. So the wedge can either break in two directions, either go down or go up. And when it goes up, it goes for a measured move up, which is why I did this measured move target. I don't know why I chose. I think I chose this area. Let me actually correct it because it's not. It's not correct. Let me actually do that right now. All right, here we go. So that was the breakout point. No, let's use the. I usually normally use the bodies. Anyway, the point is we're going somewhere in this area. This is resistance. I thought, okay, we're probably going to get some sellers here. If anything, say for instance, I was in a short and I wanted to average down or get out break even, and say I shorted, I don't know, maybe I shorted here and I shorted again up here, I would need to get out. Let me just say I shorted the close of this bar. I would need, yeah, I would have been trapped. The only way I would have made money is if I shorted this second bar and possibly gotten out here, but I would have been trapped. Anyway, so do you still hang on? I also see how many market profile POC is different. Oh, okay. I think you're having a different conversation with someone else. Anyway, so we now had this, and I thought, okay, I took a short over here. I actually took a short here, and I said, okay, we need to break this triangle here. Actually, it wasn't a triangle; it was just two bear bars. One, and then we need to break this and go. But we didn't collapse. We had bad follow through. I got out for I think 2 points. I took a short here, got out 2 points. Watch this bar. I noticed that we now had a high one, which got triggered. This went down. You could technically say there was a high two because I have a double bottom, and that obviously went higher. So bulls bought this low. Obviously now I believe this is a breakout. If it's a breakout, we're in the channel phase. So this is the first high, second high, third high. At which point I'm thinking, okay, we can short here again. Maybe it's a test of this or a test of this or this. But then we get out here, we try to, and I actually take a short here on NQ. So I had NQ running here, and I actually shorted this bar. This seemed to be working because we had a double top here and here. However, that led to a massive breakout. Again, another endless pullback, just like the same we have here, another endless pullback here. And the signs are there. You're seeing tails below the bars, and I was not reading that, and I should have. Yesterday we had endless pullback as well. We had one here, we had another one here, and then breakout, but this failed. So again, two endless pullbacks, consecutive pullbacks. So you're definitely one of them is going to reverse, and I guess this is the one that failed, that reversed. So we had this breakout, and as this bar was forming, I got in with a few contracts on minis, not micros, because I just thought this is looking very strong. We're definitely, if anything, we're going to get a second leg up. We have such a strong breakout. The only thing that would scare me is if we get a bear bar, really strong bear bar that engulfs this candle. And if that is the case, then that would be a buy climax that that has basically failed, like a breakout, or what do you want to call it, an exhaustion gap, because this is the biggest bar in this entire move. So you should be scared that it's going to reverse at some point. Anyway, so this pullback for 50%. Obviously, bulls who had FOMO, who missed this move, will buy this move and go for at least 1-to-1. So say for instance this is 50% here. You know that bulls will probably, actually I could move this up. So bulls would go for at least 1-to-1, so they would try and get out. Or if they, and then the ones who got in here, you can see they got out round about. They bought that close. They got out round about here. Yes. So Vince asked me a question. Did I get out my shorts? I got out my shorts here. No, I got on my shorts when this was forming. I shorted again here because I thought this was here. But then Damon made a very good point. He's like, why would the bear short here when they can short up here? And I thought, well, I guess that's one point. But then also we have a wedge. We've got now this range. Maybe this is a second range. Normally, sometimes on a range day, you get one range, then you get a small range here, and then it goes back and makes another range, or it goes back into the previous range. but this time it actually went below and it went above the range. And then it always comes back to the opening price. It's so weird, right? Um, but yeah, so instead I went long as this bar, as this broke out of this bar, I went long. Because at this point I realized this is not an exhaustive parabolic wedge top. This is a breakout of this wedge again. And also we're holding we've held the MA here. Usually when you hold the MA like this, it's usually a sign that we're transitioning to a bull trend. No problem, Waterbrook. Go for it. Like I said, I'm recording it, so I'll post it on my YouTube. Yeah, so that was what I did. I walked away, and I remember saying that we're probably going to get a 50% pullback over here. Usually, whenever you have a big explosion like this, there's always FOMO. You're going to get a second leg. My rule is two bull bars. Anywhere you have two bull bars, you get a second leg. So you have three bull bars in a row, you should get a second leg, because people have FOMO generally. And this was the second leg. And then you had a double top test in the previous day's high. Lots of sellers. Remember, sellers have sold here very strongly, and the night before. Um, and now, this is what happened today. Born, you have a question. You said we need to figure out the days when you're bearish and I'm bullish, like today, so we can expect both of us to be right at the same point. Let me be honest. This day was clear. This was when things became clear. I was not certain about this breakout here. I was certain about this because of this wedge top. I was almost certainly clear about this. I was okay with this, but then when this bar appeared, I was not sure we were going to break out again. Then when you start seeing these dojis, it tells you that bulls are already buying, and this already told me that it looks like we're going to reverse. The issue I had here was I was hoping we would be on a bear trend because, like I said, I was trading this and I thought we were going to collapse, but instead we haven't. Now someone may ask, why do you think you'll collapse? Because I think we're still in this whole move. I still think we have a wedge bottom forming, and this is the first. So if one pullback, two pullback, and I still think we're going to form a one more low before we reverse completely. So maybe I'm just waiting for that low to happen desperately, and every day we make a top, I'm thinking, okay, we should collapse today, and that has not happened yet. Justin asks, says, can you talk about avoiding the trading range open? So I don't think it's a question of avoiding the trading range open. I think it's just a question of looking for clarity. So the way I look at it, and trust me, I get caught in opens too, but the best way to trade trading range opens is you should trade small, use a wide stop. You don't know what's going to happen. If you're scalping, like now you see tails on bars, you already know it's a limit order market. So use a really wide stop and trade really small. You know you're going to get three. If you get something like this and then you get this, short it again. That's what I do. If I get this and I get two bear bars in a row, if I get a bull bar, I will short the bull bar around about here and just put a stop up here and then get out, maybe break even or get out for a profit. As you can see, you would have made money. I'm reading something you just posted on what Brad said. It says if a trader has trouble in the open, they should consider waiting for 6 to 12 bars for more clarity. I agree. The open often has lots of reversals, so it is important not to be eager to bet on breakouts. Uh, it is easy to take a big loss in the open betting for breakouts that will fail. I agree. I mean, the open tells you something about what's going to happen in the day. And the fact that you had this, what helps me sometimes is I just switch to MNQ and I want to see what's happening here. And here I can see we have a double bottom with this double bottom. So you have one, two, and you have here. So that tells me already that we're testing this price and we've tested it again and we're getting obviously strong follow through. So chances are if we have two strong bear bars and this is already support, bulls are buying here, getting at least 50%. This is a trading range. And then this bar appears, it probably will get here and will probably reverse. And look at what happened at the moving average. They held the moving average, and of course they broke the higher day. You have another wedge here, 1, 2, 3, and then that reversed testing the low of day. In fact, NQ was easier to trade because it just stayed within this range that it's been on since yesterday. You can see the top here, the bottom here, and you could have just traded this whole thing based on that entire range. Yes, I think it was a bit more confusing, only because the range high was just here, wasn't here, and then the low went below here. Although this for me is technically a test of this, actually a test of this, and then we went back all the way to the top. This move shouldn't be confusing, but I guess because I was thinking we're in a bear trend, and I kept on thinking we're in a broad bear trend, but it was not. I don't know why I was betting on shorts when really we were still going to test the highs. This is a typical trading range. This is the high, this is the low, um, and I just basically had a bias, and that made it difficult. I mean, I made money today, but it made it difficult because I was so bent on price going down. Even though I'm looking at the price action and I'm seeing tails everywhere, I'm seeing wicks everywhere, I'm seeing lots of reversals. So even if this fell, it wasn't going to go very far because it just had so many tails. The breakouts were in this direction, and I was trading against the breakouts, just not thinking or betting on this going any higher. I was betting on it reversing. Um, yeah, I'm just reading your message. It says, "I think if you see the overlap, I'm going to avoid them." That's a good point. So then, if you're a stop order trader, don't trade this area. Like, don't wait till things look. Um, you don't like white stops, then don't trade trading ranges. You can't make money trading ranges using tight stops because you're gonna get stopped out. Um, yeah, don't trade trading ranges. If you don't know how to use a wide stop and trade small, then don't trade trading ranges because you're just. The thing is, trading ranges are the easiest days to trade because it's simple. Just sell the highs and buy the lows. Yeah, you may have bought this low, but it would have come back here. Um, but the problem is you need a wide stop for that, and if you're not using two positions, you're gonna end up not knowing where to buy again. Like now, you could have bought here. Okay, you'd have made money, but say you bought here and it didn't work out, you could have bought here again, particularly above this bull bar. It came back. So all the trap traders who bought this low, they got out, and some of them even made money because they realized that this thing is not. We got a big massive bear bar, not good, and they reversed the entire bar, and they all got out. But every time you made a new low, you could see they bought them, and all the gaps were closed. So the trading ranges like that. This is actually the hard part to trade if you were trying to get in because your stop was so far away. Say you were going to take this long, this is where your stop needs to be. You're going to take it short, your stop needs to be all the way up here. And it was just hard. This part was the hard part. This part was the easier part today. But it's easy to at the open to get a strong sense of um, FOMO because so much is going on and you're thinking, "Oh, I want to get in, I want to get in," but you're not even reading the chart. And I think it's so important that before you actually get into something, what is the market trying to do? And it's obvious the market is confused here. It's up, it's going down, it's going up, it's going down, and it's still making lower lows and lower highs. So you know it's going down when it's making lower lows, lower highs. But at some point it's going to wedge and reverse, and it starts making high highs and high lows. Then it got into a triangle here, and then it just starts to go up. But as it's going up, you're seeing lots of reversals. Every strong bull bar is reversing, every one of them. Um, and in fact, this one that closes here reverses. This goes up and then reverses. So it's like this whole combination is a doji on its own, and you have to be aware of that. That's why I was saying to you earlier, Justin, just go to a 3 minute chart and you can things are a bit clearer because the bars are a bit more complete. You know that, okay, fine, I've got a bear bar here, I could probably sell below this with a stop order, get down here and test somewhere here. You got to take quick profits. You also got to be aware of the fact that trade ranges always have triangles. So if you ever look at a trading range, you're always going to get an indecision triangle. um, I mean, we had one here, but like if I can go to a lot of trading ranges, this was a big massive triangle. If you remember, this itself was 1 2 3 1 2 3. They always have triangles because it gets to a point where there's so much indecision. No one knows where the high or the low is. No one knows. Nobody wants to take profits too late, so they take profits early. They take profits early, and at some point, nobody wants to take any more trades. And so you have that breakout. So just be aware of things like that. Here, you had a triangle here yesterday before we went up. So just be aware that when you have a triangle forming in a trading range like this, just for me, what I do is if I say I sold here, which you shouldn't do, but let's say you sold here and you're now trapped, don't be scared. You've had lots of reversals. You're going to reverse again. So sell again and get out. If you can't sell again, just wait for it to come back and get out. But if you start seeing bars going up on top of bars, then you want to get out at that point. But remember, a trading range, if you can't use limit orders and you can't use a wide stop, don't trade a trading range day because you're going to lose money. Wait till the market is doing this. Then you can take a trade. But when it starts doing this, don't trade it because you're going to lose money and you're going to start taking trades. You're going to be like, oh, I'm going to sell here when you should be buying here. But you're like, yeah, but look, it's really, it's selling off, but you're ignoring this. This is the first leg up. You're going to get a pullback. This is the second leg, right? Trading ranges always have two legs. One pullback, two, and normally you get one pullback. You haven't got the second leg yet. I think I understand the concept of it. Just think where I am at now. I'm limited and not capable because of my account. Yeah, small accounts you can't. It's difficult to trade with a small stop. And that's why I say if you're going to trade, especially a trading range, you need a wide stop. The best place to trade is here. But I also think if you're going to trade a trading range, trade options. Wait for clarity, yes, obviously. Trade options, don't trade futures because a micro is probably too much. For a small account, get a I would get small options, like really, really small options, and I would split my trades into two. Don't trade futures. If you could, I think we're talking about trading RTY or something like that, or M2K. You could try M2K. I think M2K might give you. It's not on my list. It used to be here, but I think M2K might give you what you're looking for. But don't trade micros if you can't afford. Remember, I said to you yesterday when we talked, I said if you're going to trade this range, you got to ask yourself what is the range for the day typically 60 points. Now you need to multiply that by 2, multiply that by 5. So that's 120, right? By 5. So you're talking about $600, right? You need to be able to risk $600 if you're going to successfully trade this because you're going to need two positions and you got to be able to put your stop at the let's say you sold here, you got to be able to put your stop up here somewhere and sell again, so you're risking both two contracts. I think if you can't do that with one micro, it's going to be difficult to take a trade with the trading ranges. However, I think if you are doing it with options, then you can now decide that this whole range, which is about 60, if you can afford $60, right, or $120, then trade a SPY contract with a delta of, I don't know, zero point 0.1 or something like that. So you know that if it moves from here to here, you can at least afford it. You don't feel you're going to lose that much money, and therefore you can now make good decisions and say, okay, fine, this whole move, say you shorted here, and you're like, oh, I need to short here again. That's just $25, right? And if you say to yourself, yeah, I can afford $25, I can probably save that's $12 for that whole move, right? You can take another short here, so you have two positions, and you get out around here, and you will be at least break even, or even past break even, because if you short it here and short it again, your average price would be here. You can get out here, and you would have made maybe about $5 or $6. The point is, yeah, you're not going to make lots of money, but you're going to at least get better in trading it. Yesterday, if you had, and I noticed this when I back tested some stuff, I was looking at the chart yesterday. If you had traded every single setup, right? So you took this breakout, then you took this high one or high two over here, and then you shorted this wedge top, then you went long here, right? Even got out here, caught this breakout, took this short, and then took this breakout, you'd have made about 80 points. Now, if obviously to do that, you need to be really good. Now, if you had made 80 points with just one contract, right? One MES times 80 points is 400 bucks, right? Just one contract if you had done so. Um, Now, if you decide to do that with options, you certainly can, because you're thinking, okay, that's 400 bucks with freaking. I could do half of that if I did that with an option that gave me, I don't know, $2 or $2.50 per point, right? So at least now you're not risking so much, and you can break your positions. Anyway, so that's the main thing. It's just knowing what, like for instance, this when I saw this, I was expecting this to happen, and but I even though I shorted here, I got about 8 points here, but I didn't want to get out because I thought I want this to collapse here. I wanted to get out below here. It didn't happen. It started to reverse. This closes a doji. It looked like a wedge, and it was a wedge, a micro wedge if you want to call it. And I thought this is not going to work out. I'm getting out. So I got out for like 2 points here. I did a lot of that today, taking shorts at these areas. I shorted moving average, didn't really get much. Shorted below this moving average, did not get much. This broke out here, and I thought, okay, we're definitely going higher. So I was reading things wrongly. I was doing the opposite of what I should have been doing because of the fact that I felt we had broken out of this range. We're going into a second range. I negated the fact that sometimes we go into this range, get into another range halfway, and then go back into this range. And sometimes we now get another range halfway above. And the whole day becomes the entire range. So instead of having that, you have what, 60 points, which is a range day's range. Um, yeah, so if you, yeah, and remember I told you my issue with white stops is you're already planning on, like every time I take a trade, I've already planned where my stop needs to be for that trade, and I'm okay with my risk for twice that contract, but I'm in with one. So I give you an example. I took a trade short here. My stop was, I think, up here or even up here because I knew that we could reverse. I knew there was resistance here. So when this started working, I was great. But I was like, oh, damn, I wish I'd entered both positions. But I didn't want to put in a second position in case we reverse. And, I'm just like, I'm not, I'm not doing as well. So I had to let the whole thing go. I think it was about, I can't remember how many points it was, 10 points here. Um, but I didn't want to switch to longs because I was already short. Had I switched to longs and seen this as a major trend reversal, or maybe even taken this is a higher low major trend reversal, so this is a good buy here, good stop here, this would have been good. And as a stop entry trader, you could have done that. Um, but even if this had gone down, I know there are buyers here, so I could have bought here just to test the moving average to get out. And I think that's the skill. You need to develop that skill of if I'm trapped, how do I get out and where do I buy? Like, what am I going to buy? Like, what am I going to buy? And like I told you, traders bought here because they sold this area here, or they bought here, or they bought this bar. And so they're trying to get out and they got out here for break even. Traders are going to do that. And if they're going to do that, you can do that too. Someone asked me a question I just skipped over. Um, all right, I'm gonna stop my recording in case anyone has any questions.